You're doing okay. So welcome to this week market overview of a few synthetic indices and a few currency pairs as well. So we're gonna just have a look at the bias for this week, what we are likely to expect from the market. Okay, so we're gonna start off with VIX 50 on a daily time frame. Okay, so you know the rules. Every time we have to look at the higher time frame to see what the market is doing. Okay, so this for some time was a downtrend. Okay, so if you have a look at this part of the equation before the new one, now it sort of seems it's driving off of some form of consolidation. Okay, so whenever the market changes direction, you can see some form of change in pattern. Okay, so but we have that. We have these levels that the market is sort of failing to break below, but this is a daily time frame. Okay, so we have that in mind. Okay, so we don't have to draw a lot of zones. So off of this move, now we're currently concentrating on what is going on here. If we pull that off, then we're gonna have something like this. Okay, let us just use lines. We have this area of interest here. Remember, when you draw a line or a zone, always remember it's not a single line. This is a zone that the market might come into. So this whole area, the reason why we avoid drawing zones like this on a higher time frame is because when you drop down to a smaller time frame, this is going to look very big. So that is why you just have to use your line chart. Okay, so this to me looks like some form of consolidation, but overall we know that we um we also have this area as well. Okay, that the market failed to break below. Why do you have to always have this information at hand? Is because over the coming week, you're going to have a directional bias to say, okay, the market did bounce off this zone. Where is the next point of interest that the market might go to? So definitely we're expecting some form of reaction in this zone up here. Okay, if this market keeps on going bullish. So let us drop down to a 4 hour. We look at that as well. So as you trade, always remember higher time frame going down to your lower time frame to understand where overall the market is. Okay, so as you can see, the market here is some form of zone. Okay, we can do that as well. As you drop down, zones become clearer. Okay, so we did bounce off, bounce again, broke out, came back in. Now we are back out. Okay, so we have also an area of interest currently on the 4 hour. You see this? So now we can start looking at these areas as zones. Okay, so already that tells you something. Here in this area here, the market found some form of resistance, then or support, sorry, then bounce off to the back. When it broke down here, came back as resistance, then it went all the way down. Okay, so having a story is very important as you're trading. Okay, the last time frame we're going to look at is the 1 hour, because this is just an overview of what we are expecting in the forex market as far as VIX 75. The bias might change, but overall this is what we are looking at. Okay, so how would you trade this? We have area there. This is also an area of interest. So we have an area currently that the market failed to break previously. Okay, so remember the target is somewhere up there. How are you going to enter into this trade? Okay, how are you going to enter into this trade? There are two things involved. It's either the market bounces up here, retest, shows signs of continuation, then we can take some buys in this area to the upside. or the market comes down in this area, consolidates, comes down, retest in this area, then we can either consider sales to the downside, or it might just come back into this zone, do a retest, then we do a continuation to the downside. So now that you have two sides of the story, you're prepared on what to do next. Okay, it is simple to analyze like this. The only challenge that most people face are the emotions. But as far as analysis, once you have it planned out, the thing that you have to do now is patiently wait for that setup to happen. If it doesn't happen, it doesn't happen. But if it does, so you have two sides of the story. Okay, you're waiting for the buy here, zones all the way. Your stop loss should be somewhere there, or a sell in this area here. Your target is somewhere there. Okay, stop loss will be somewhere there. So you have two sides of the story already. So if it plays out either way, you are already prepared. The next indice we're gonna look at is VIX 25, which is volatility 25. So we're only gonna look at we're only gonna look at three indices, then one currency and Nasdaq as well. Okay. So overall, this has been a long-term seller's market. Okay, it's been selling, but currently we are failing to break below this area here. Okay, we failed to break there, so we can even draw it like this. So yeah, this is a perfect zone. It broke above, retested in this area, went down again. So now such setups, this is a clear consolidation. Okay, and what do we do in a consolidation? We stay away from the market when the market is consolidating. But tomorrow is another day, which means it's a Monday. So now we might either break out of this consolidation to the upside to continue up, or break below. So let us look at the 4-hour to see the details that are there. Okay. Always remember to keep trading simple. Don't complicate anything. So look at, this is a clear consolidation. In some ways, somebody might look at it in these lines. Okay, something like this. It is also somewhat valid. Okay, this is what we call a bearish flag. For those that don't know, market comes down, sort of consolidates a bit to either do a continuation to the downside. So this pattern is called a bearish flag. If it was something like this, a market coming from up, then it consolidates. Then this is what we call a bullish flag pattern. In case you don't know about chart patterns, it is very important that you do. Okay, so now how would you trade off of this? It is more of a sell bias type of setup, because usually it can either go both ways. So now the overall that we are looking at is either the market comes back into this area here of interest, shows signs of selling pressure, then we can take it to the downside, or it comes down. It might even stop just here because there's this zone here, or it might just touch down in this zone, comes back, retest this channel. Okay, then a continuation sell to the downside. So we might draw an area of interest here like this. Okay, let me just remove these. So as far as analyzing, always keep it simple. Okay, don't complicate anything. Don't overdraw your lines, don't overdraw zones. It is okay. So we said this usually is more sell bias. So if we were to take a sell, it would be somewhere in there. Our stop loss will be somewhere above there. Our take profit can be in that zone there. Okay, that is the first move. If it breaks out completely to the upside, we wait for that retest, or we wait for this extra sell if we miss this opportunity here. If the market, we can have something like this. So the market might come all the way down. We wait for the retest first, then we take it to the downside. Do we have an area of interest down there that we can look at? We have this in here, somewhere there. Okay, because it's always important to also look to your left as you are trading. Don't just set your targets in the middle of nowhere, because markets are attracted to what they previously did. So price is attracted to where price was previously for some odd, funny reason. So those are sell bias setups. How would we, if it goes bullish? Either it breaks this zone, comes back to either retest this trend line here, this trend line, or just comes back in this zone to continue to the upside. Depending on the candlesticks that are printed in this area, we might look at a buy. Okay, somewhere there, your stop loss somewhere in there. Take profit as well. Always look to your left. Say, where is the market attracted to? This is not realistic, but you can have something like this, okay? Because at least there were some zones here where the market did fail to go above. Okay, always have two sides of where you are going. Okay, so if we look at 1 hour, the same applies. So now remember, your confirmation of all these is candlesticks. You have to have the right candlestick patterns to show you that yes, this market is gonna sell or gonna continue buying. Okay, always pay attention to the types of candles that are printed at an area of interest. Okay, so the next pair we're gonna look at VIX 75, so that we don't make this video long. Okay, on currencies we're gonna look only at Nasdaq. So NAS, what is NAS doing? Usually markets consolidate a lot during the weekends. But according to this, we have an area of interest where the market bounced off. Then we also have an area down here where the market might be headed to. Okay, because remember the market touched down here, there was a reaction here, broke above. So definitely we might be headed into that area again to complete this some funny consolidation that is going on here. Okay, so this is a daily. We're gonna go down to the 4 hour. Let us not delay much. What is 4 hour doing? Story that we're just from talking about. Okay, so we have more zones on the 4 hour as well, areas in the market. So possibly the market is coming back to retest this area. You might jump in on a continuation sell to the downside, but usually I don't recommend people trading consolidations because they're just out there to get your money. Okay, so the other thing, if we have the right candlesticks in this area, then yes, we might continue with a sell here. Okay, so these are a lot of pips when it comes to VIX, something like that. Okay, it might not play out to the teeth, but you have that bias. Then once it reaches in this area, you look out for continuation candles that show signs that okay, the market is rejecting this zone and wants to continue back to the upside. But more of the story, avoid what? Consolidations. So already the market is denying this zone here where it bounced off. You see how it is bouncing off to the upside. So if it breaks above something like this, we have something like that, retest, we might jump in for that buy to the upside. So you always have to have two sides of the story because the market moves up and down, and you always have to prepare mentally which side you're gonna be on. Okay, if it plays out to say the market is gonna go up, you have to have a criteria you have to wait for. Say, okay, if it breaks this zone, retest it and shows me signs of continuation, then I can take a continuation buy to the upside. Don't just trade because you've just seen things that, okay, the market is moving up, you've just seen one candle. You have to have directional bias, you have to have a zone, you have to have the candlesticks. Then once you have that complete, then you can take the trade. Okay, so let us set up for Nasdaq. Then after that, we conclude this chart. This is a daily time, but we've seen it fall for quite some time, and this is now when it is making its correction move. Okay, otherwise it was making lower lows, lower highs. Now it is breaking those levels and started making higher highs, higher lows, which is a sign of what? Bullish pressure. Okay, so we're going to draw some zones of interest where we consider to say, okay, uh, the market did touch down in these areas. Sorry about that. The market did touch down in those areas. And remember, when you're on the daily, it's don't draw too many zones. It's pointless. Just draw where the market is coming from and where the market is likely to go. Okay, and those are the zones that are important. Okay, you just have zones, but yet again, don't draw zones very far away, like maybe this one here. This is a daily time frame, so you have to understand for it to get to that area, it will take some days. It's not like you're gonna see just one candle shoot to the upside. No, so you have minor zones in the area. So now those also you have to. So somewhere here we might draw. Okay. So now you have a realistic goal to say, okay, there's a possibility the market might be headed into that area. Okay. So what do you do? Let's see the 4 hour and what its behavior is based on. Okay. Oh, this is some good money. So bullish pressure. Look at this. Market has been pushing bullish for quite some time. Okay, so we have that. We can even draw one to the upside. So you see how this is clockwork. What do I mean? This is like to the script, man. This is what you learn if you understand price action. This is what the things you learn about. Okay, so now you know that the market is in a channel, and you know that there's a zone here. Definitely, there should be some move like this. But now, because the market is closed right now, the currency market, as soon as it opens, it won't go straight up. There will be some form of dilly